Hi Team Value, JJ here, welcome back. Well, today I'm going to react to a recent interview with Alibaba Chair Joe Tsai. He talks about where the company's going, what he thinks the situation is like at the moment, his investing in the company. He's bought more shares lately along with Jack Ma. So let's see what he has to say. Has the company bottomed and it's going to be up from here? Let's see what he has to say. What's in it for investors? Let's go.
I think investors want to see more. I think we have had a track record of delivering performance in the past years, but over the more recent years, we haven't done as well because of competition. Of course, there's a macro environment, there's a regulatory environment, there's geopolitics, but when it comes down to it, it's really how well we compete, how well we serve our customers.
Interesting that he's acknowledging this intense competition there in China that they've had in recent years compared to in the past, that he says that up front.
And those are the areas where, in the context of our restructuring, we're really looking into and trying to improve ourselves. That's really what would get our share price back, is to deliver the performance for our shareholders.
You and Jack have been buying up shares. Global investors that we've been speaking to calling it a very good bargain.
It's Jack Ma there, of course. He and Jack Ma, both co-founders, have been buying a lot of shares lately, a big chunk of shares.
When do you think we can see a move up in your share price?
There's a couple of secular factors I want to mention. If you look at our Alibaba business, when you boil it down to what's the core, we're in two businesses, e-commerce and cloud computing. The secular forces in e-commerce is that in China.
So you mentioned those two because they're the biggest, and cloud hasn't been growing very much at all. Both of these businesses, the main areas for Alibaba, which is a group of businesses, really 6 segments, but the e-commerce, China e-commerce is the biggest, although the international is growing pretty well, pretty fast, big double digits, high in the 20s. It was in the last earnings, and the cloud has been very disappointing for investors.
There's 30% penetration of e-commerce to total retail, but over the next 5 years, that penetration is going to go up to 40% and even higher and beyond. And in terms of cloud computing, you look at the digitization of the whole economy in China. By digitization, I mean capturing data that reflect real activity, business activity in the economy. All of that is being digitized. And so there's an explosion of data. And when you have lots of data, you're going to need cloud computing to manage and handle all of that data.
In the US as well, cloud computing, the giants in cloud, Microsoft, Google, Amazon, and Alibaba's the counterpart really in China. So they must have so much data in China. Imagine the amount of data that's being produced, but yet it's growing so slowly. So, there's definitely work to do there.
China is about 17% of global GDP, but the size of the data, digital data in China is approaching 30% of the world.
One of Alibaba's key strategies was positioning for China's consumption upgrade, but there's economic headwinds in China, and we're looking at one of your competitors, Pinduoduo, focusing on budget consumption and lower-priced goods. They've been gaining market share, and we've seen their market value overtake yours briefly. Was this a strategy misstep?
We're investing more in technology to make sure that we can deliver the best products to the consumer needs that manifests in the marketplace. So the pricing competition is definitely there, and we have to take a few lessons from our competitors. But the good thing is that can be done. It's within our control.
Interesting that he said that, because Jack Ma, in his internal memo that was leaked, that I've made a video about, he congratulated PDD and the competitors. Joe Tsai here saying the same thing, that it's in their control to be able to compete and do better in the future. Now in this next clip, Joe Tsai talks about his investment in Alibaba and of course Jack Ma's. I've made a video about that previously, how they recently invested pretty big, more shares, buying shares in Alibaba. And he talks about the confidence here and why they did that.
I think it's important that two of the early founders in the business demonstrate their confidence in the company by being significant shareholders. A very substantial part of our net worth are in the company. So that's an important message.
I think that is an important message. Similar companies, if you think of Mark Zuckerberg, Elon Musk, Jeff Bezos, they all have, the founders have skin in the game in the company, and Alibaba still has that. Or these two of the founders, there are a few co-founders, two of the co-founders, Eddie Wu as well, who's still with the company, the current CEO. So these two, Jack Ma and Joe Tsai, have been buying shares back and, talking about the confidence that should give or can give to investors having skin in the game. As a analyst, it's important to see that, to have a look at how much stake management has, and they're not getting rid of it, they're going back in. Now, if you're getting value out of this episode so far and you think that I'm earning it, please remember to hit that like button to help the almighty algorithm to spread it to more people. Thanks.
I think it's for us to come back into the business. Well, Jack is not back in the business, but as I come back into the business, what I look at in the context of our reorganization, the most important thing is we got to have a solid management team in place.
Interesting that he talked about Jack Ma there. It doesn't make me wonder if he was allowed to, if the government allowed him to, or he saw that he could come back in. Imagine what would happen if Jack Ma came back in some capacity in some sort of leadership position. I think that probably would help the share price, certainly help confidence.
And as you know, we've made some changes in personnel and also organizational structure, but that's necessary. What it's done is it's breathed new life into the management, breathed new confidence into employees. Talk about organizational structure.
They have talked about, these IPOs, the 6 business segments, IPOing them, making them into their own entities, but the market conditions aren't great, and he does go on to talk about that. They've put off the cloud IPO in particular.
We have to set up the strategy first, and then develop the org structure that will fit the strategy. So those are all parts of our reorganization. A lot of that is about governance, how we make decisions faster, about how we make our management team more nimble that will fit our strategy. Now, the other part of our reorganization is what do we do with the assets, the various assets? And we have already told our investors that there are certain things that are core to us, as I mentioned, e-commerce and cloud computing, and other things that may not be so core, and financial investments that we try to dispose of. In the last quarter to date, we've already sold $1.7 billion of financial investments. So we're monetizing those investments that are not core to us.
It's going to be interesting to see in the next earnings where they talk about this, monetizing some assets that are non-core, that aren't performing very well, sort of streamlining the business with this new management structure.
So that's also important. What I want to also address is, the spin-offs and the separate capital markets transactions that we have announced with respect to cloud and also the China-U.S. business. I think in a good market, it makes sense to put a independent valuation on parts of your business via a capital markets transaction, so that the valuation becomes more transparent to investors.
So they want to realize more value by having these IPOs, these different spin-offs that he talked about, whether it's a good time to do that or not, and he does go on to talk about that.
Investors can value the whole of your business. They use sum of the parts methodology. Now, having said that, since we made the announcement of the reorganization last March, markets just haven't been great.
They sure haven't. That they announced this, as he said, and the market's been terrible. The Chinese economy has not been good. It's all sort of been bad news as far as the market conditions. And even the US the IPO activity, even in the US, is practically zero. Remember a few years ago, around 2021, there was all these SPACs and a huge amount of IPO activity, and it's gone next to zero. And it's the same, like same in China, same in Hong Kong. Not a great time to have IPOs. Valuations not high, and best to do IPOs at the top of the valuation from the company's point of view.
A environment where the sentiment is not very high, doing a capital markets transaction actually doesn't work in terms of bringing transparency to the underlying value of the assets.
So he's saying they'd be undervalued if they went to market in terrible conditions, rather than at an exuberant time where they're possibly overvalued. He's saying that'd be undervalued.
That's why we've decided, number one, we said that we don't want to spin them off the cloud. And let's look at some of the synergies that the cloud business bring to our core business. We've also said that in the current weak environment, in terms, with the logistics business, China, we're going to put a pause to that.
That business is growing pretty well in the last earnings. Again, another business, the international division and logistics was growing pretty well. Those are good businesses, so they wouldn't want to spin them off at a time when the valuations were low. It certainly would. I don't think it would realize the valuation, so they've definitely put a hold on that.
So I think there's, you really have to be adaptive to the environment. And in the current downdraft of, lower sentiment and market environment, what we want to focus on is look at the synergies between our business units. The cloud business has been developed because we developed the technology to support our core internal use. Now, as we continue to make developments and improve our technology for our own use, we can also open that up to serve third-party customers. Same thing in logistics. The logistics support our domestic e-commerce business as well as our cross-border e-commerce business. So we're very, very focused on generating the synergies between those business units.
The synergies between business units. You mentioned cloud there. It's interesting that they're coming out with AI as well, as US companies have. A lot of companies are talking about AI. Alibaba's no different here, so it'll be interesting to see if that works. Obviously, it takes a lot of data, and data centers are going to be growing. Different kind of data centers, it has to be said, with AI than the older data centers, a different kind of framework. So it's going to be interesting to see what they're doing there and how the synergies evolve between the companies while they wait. You get the impression that they're kind of waiting for the market to change so they can IPO these businesses. It doesn't look like it's going to happen anytime soon based on a sentiment, as you said, and market conditions not looking great. Now, if you're a regular here or if you're new and you haven't checked out the Art of Value Patreon yet, I'll put a link in the description for that. Over there, I post some exclusive content that I don't post anywhere else. But there's also content for free members if you just want to do that. It's just the price of a cup of coffee each month, though, if you just want to try it out for a month and see how it goes. See some of that content I'm making for members. I'll put a link in the description and see you over there. In this clip, Chair Joe Tsai talks about US-China relations and the importance of that and how that's going.
Well, we can work on the things that we can control. Geopolitics, relationships between countries is something that's difficult for us to control, but I think it does make sense for us to read the situation carefully and try to predict what will happen. I think as I look out into the near future or the medium-term future, the relationship between China and the United States are going to be challenged on the one hand, but also both governments have realized that the two countries need to work together because there's so many symbiotic things in terms of trade, financial flows, and now exchange of people. We just came from the sports summit. We talked about how sports can unite the world, and that's very important as well.
So yes, it's underestimated, I think, with the tension between the US and China, how much there is working between the two countries. Of course, there are US companies, many US companies working inside China, producing products. There's so much trade in between the two. They should, as Charlie Munger once said before he died, that civilized nations should be able to get along together. Warren Buffett has He did sell out of Taiwan Semiconductor after buying into it. Is selling out quite soon later because of the perceived risk there, but he's pretty conservative on that risk. He said it was a great company, one of the world's best companies, but in a bad location, and Taiwan's one of those tension points that could happen or might not if things get smoothed over.
So I think that we're in the new normal, which is there's going to be areas where the two countries that compete against each other very fiercely, but there are also other areas that countries work with each other. And we will, as one of the companies that kind of straddle these worlds, we will have to learn how to deal with it and make the best of it.
Temu, Shein, TikTok, these are all gaining traction in the United States. Can we expect Alibaba to enter the U.S. market?
There's been tension over this too that probably be ongoing with TikTok and PDD. Both of those, or PDD is the parent company there of Temu, and there have been talk in the US politically about having those apps there, or whether they ban them or not. US social media companies aren't really allowed in China, so it'll be interesting to see what happens there as well.
Well, we're going to see. They have done a very good job going into the US market, and that's because the consumers, they're bringing a value proposition to the consumers in the US. And the fact is, China manufactured products are of high quality, and you can deliver them at reasonable prices. And that's a great consumer proposition.
They're not all great quality, of course. People complain about some of the quality of the products coming from China, but in general, they are pretty good quality. There's so much that gets sent from China that, as I said, the trade backwards and forwards. And where I am, AliExpress from Alibaba is one of the big apps. In fact, it's much easier to get it from where I am in New Zealand than Amazon. Amazon's pretty expensive to get it here, but AliExpress and Temu are the ones that are used here.
So they're very aggressive at doing it, and we're going to observe and figure out what we want to do. Having said that, the U.S. is just one part of the world, right? There are other markets in the world where we can play in. And we have a platform called AliExpress. We also have a platform in Turkey called Trendyol. And they have done a very good job in other parts of the world. And we'll continue to execute our strategy there.
Interesting that he said that, because you get the feeling, or it really is, that they're not focusing on the US at all. They're focusing on other areas. Europe and Asia Pacific region is really where their growth is, and it is strong growth in international. As he said, there's plenty to go around in the rest of the world. Now, if we just look at the Alibaba share price recently, we can see that the bottom here was still actually the 28th of October 2022. As it bottomed out and it's now heading up, it's up 15.39% there. But having said that, if we go to year to date, we can see that it's actually down just 1.62%. So it's sort of been going up and down along a channel there since bottoming out. It really hasn't done much. So, but where is the turning point? Was that the bottom and then trend up? It remains to be seen. We'll have to see how the company itself goes. Joe Tsai has done a very good job of talking about their future, elaborating on some of the things that they said in their last earnings. So can it make a recovery? How long are investors prepared to wait who've been in it for a long time? And I know there are some super investors, I've made videos about that too, that have invested in it recently, and JD and other Chinese companies, because they are down so low, value propositions from here. So what do you think of what Joe Tsai had to say here? And do you think that Alibaba, the stock, has bottomed and it's going to be up from here? Now, if you're watching this on YouTube, I'm going to put a link here to my playlist of previous Alibaba stock videos, including those recent earnings. And here I'm going to put a link to the video that YouTube thinks that you in particular should watch next. So go and see either of those now if you want to. I'll put a link in the description for those watching or listening elsewhere. And thanks to everybody for watching or listening wherever you're doing that, and see you in the next one.